Hello YouTube, welcome to Winning Streak. I hope that everybody is doing well. I hope that everyone is doing well. I've honestly been outside of the markets because I don't like to trade this consolidation market. But then I really tried, I really tried my best of luck to produce content for you guys and to obviously teach you how this market works. So there are some information that I couldn't release on time, but essentially around the month end, we have a consolidation. I remember back when this channel was under a different name. It was called Trade to Live, right? I had a different agenda back then about the month end consolidation. I did not want to trade it. I did not want to touch it. But with the consolidation of October's month end, this specific month end consolidation that you're looking at, I attempted to trade using the ICT concepts that I have acquired for all these years and to try to teach you a particular model that you guys can attempt if the conditions are right. There are certain types of consolidations, good people. There's this one that you're seeing here. It was smooth. You could see the highs, you could see the lows, the order blocks. The liquidity is just sitting up there saying hello. Take me, my guy. See that? It's very clear. And then there are certain types of consolidations that are really hard. Okay, you cannot find your trades that easily in that market condition. It's really going back and forth, back and forth. I'm trying to give you guys an example. Before the opening of the 20th of October, this is the market consolidation that I'm talking about. The one that goes back and forth, it takes out each new high that it just printed, and it takes out also the low that it just printed. It's going back and forth. It is sweeping both sides of the marketplace. This type of consolidation, I don't like to participate in it. I usually wait for the month end to begin, the 20th of October's opening price. This is when I start to count my month end. Alright, I have a nostalgic feeling about this type of video that I'm producing right now, teaching you guys about consolidation markets. As I say, there are certain types of consolidations. This is a topic that I used to touch in that trade to live. So in this market consolidation, I would normally stay out of it and not trade at all. When step index is consolidating, I am not in the charts, good people. I am waiting. So there is the month end. It prints higher aggressively. There is no retracements. Okay, it is moving fast, right? So it continues again to go up aggressively again. So price is clearly transitioning from a consolidation into a market that is trending. So that is one example of the type of consolidation that I don't want to trade. The better conditions would be on the 20th. All right, that was a beautiful swing trade to the upside, the reversal profile. That's the one up there, right? So now we've come back to where we began. All right, we are trading down here on the 27th, and we started to consolidate. This sort of price action, it is easy to spot. The consolidation highs, you see them, they are clear, they are here, and that is your algorithmic price signature. And up here, there's the other one for Sunday's opening price. It literally told you on the first day that it began trading up here, it said, here I am leaving the buy side liquidity pool. We're going to come back later into this buy side liquidity pool, because this up here is the consolidation high, right? And the consolidation low here. If you're looking at it in that format, then you are in the correct place. But if you're looking at it from this resistance down to this particular low as a support, playing around this particular area with your support and resistance ideas, that is still a good idea. But this would be a different market to trade in because it will be going back and forth a lot. Alright, it's not easy to trade a consolidation market. I did not find happiness in trading this market condition. I usually skip the month-end consolidation because it's not a good market to trade in. Even though I produced content on it, showing you guys that I can trade inside of a consolidation market, it's not nice. I tell you, trading a consolidation market, it's not nice. There's a lot of back and forth. So you need to be a scalper. You need to take trades in and out. In less than 15 minutes, you are out of your trade. Okay, in less than an hour, you are out of your trade. That type of trading, that's what you need in this market condition. Right? It's not easy to trade. So you're usually going back and forth in this market condition. So you need to take surgical strikes in and out, right? But we saw you do a swing trade using this bullish order block and attacking the buy side liquidity pools. Yes, I can do that. I'm comfortable with holding a trade. I don't care about their deep retracements. I just hold the trade through and through. Okay, that's what I tend to do. But in this market condition, I am scared as well. I, I don't like to trade this, bro. There's deep retracements. But on some occasions, I am okay with whatever outcome, right? There is this bullish order block, and it's not just any random bullish order block, right? It's not just any down candlesticks before the up movement. No, this is anchored to the daily time frame, the 20th, guys. This key level down here, yep. If you go back, if you remember, this is where we begun on the 20th. We rushed to the upside. So we've come back to fill in all of this inefficiency. That's what we did. We came back to fill in that inefficiency, and we did it right here. So the last down candlesticks going lower in that direction, those ones, yes, that is your levels that you're going to be needing when price does a market structure shift. So we've had a market structure shift and price rallied to the upside and came back down here. Inside of a scalper's mind, this is what I think, okay? This is how I would operate if I was a scalper. Well, I swing trade. I usually swing my trades. I hold them for a couple of hours or even longer. But in this market condition, which is going back and forth, it is difficult to hold my trades. So if I was a scalper, I would treat the market this way. I had this Fibonacci gap moving away from the bullish order block. It was basically printing the first high, the first up close candle above the down candlesticks here. So that is a market structure shift, right? It's a displacement fair value gap. It's going up. This is the direction that we want. And it quickly comes back down into the inefficiency. Right there is a long entry. It's a beautiful entry. What would you target? Okay, remember that you have to be in and out. So do you see a suitable take profit level? Well, we have to think in ICT terms, good people. We have this inefficiency. It's moving aggressively. It's coming into the fair value gap. So price moving aggressively like this, it leaves inefficiencies. So those inefficiencies, we want to see price action. We want to fill in those inefficiencies. So in this separation between this candlestick closing price and this opening price here, that is your volume imbalance. You could be filling in price action up to this volume imbalance. And you close the trade, that's it. When price action comes back down one more time into your fair value gap, you have a long entry and you're targeting the volume imbalance. Or if you want to have a higher take profit, then you would target the 50% of this fair value gap. That's all that you're looking for. You don't go higher than the 50%. Why don't you target the high? Well, if you're looking at step index around this particular time, it's not going to be in a hurry. It's not. It's going to consolidate. It's going to move real slow. Okay? So it gives you these ideas that you can play with. So we are seeing a resistance in this fair value gap. So we draw the fair value gap. We want to see, is price action really respecting the fair value gap? If you take the 50%, yes. So if price action is remaining below the 50% of that fair value gap, meaning that it's not in a hurry, it's going to keep on coming back into the very same level. It's going to use that as a resistance. Same way it is using it as a support. This fair value gap being used as support, yes. You can actually take longs in this fair value gap. You can take shorts in this fair value gap. I remember this one time. I think it was back in 2022 or 2023. I was trading Snap Index. That's my primary market, right? And when it came to this particular topic about a consolidation, all right, when the market was consolidating like this back then, I did not have the knowledge that I have now. Okay, I was trading this market condition when it was consolidating, and back then I was making a lot of money. I would fund literally $10, $10, good people. With this low here, I can enter a long entry and I can have my stop loss at the fair value gap low. My take profit would be easy, the volume imbalance. That's it. Whenever price taps into the fair value gap, I'm in a long and I'm closing it right there. That's the model that I used to do when I was scalping, when I was trying to find myself in this market condition. I tried scalping, I tried day trading, I tried swing trading, and primarily, honestly, I am a swing trader. So this is what I did back when I was a scalper. Okay, that's what I would do, guys. I would fund literally a small amount of money, $10, $10, and I would use this market condition at my advantage. When price action is consolidating like this means that I have a tighter stop loss on the lower time frames. I'm not just buying any fair value gap. I am buying a fair value gap that is responding away from the 20th of October. Okay, so this is the fair value gap that I would want to use for my longs. And I have been bullish, attempting to get into the buy side liquidity pools up here. I am primarily bullish, so I would be looking for long setups in this fair value gap. There is a plethora of setups that you can do inside of this market condition. I showed you the idea with the fair value gap here, which is bearish. Take out the 50%. Whenever price resists up there, I take my profit. Another trader could be thinking, okay, price is in a resistance, it needs to go down. There's the trade. Me, I'm thinking a bull short block here with a fair value gap. Another trader is thinking fair value gap, consequent encroachment is being respected here. I could take a short opportunity and I could take profit down here because I see that there is a support. Price is building up support down here. So this is a good area to take profit. Where would I take profit? At the fair value gap high. Oh, you see that? This is a simple model. This is what I used to do. With only $10, I managed to make about 100 and something within 3 days. Just up and down with price action. That was back then. I did not have the knowledge that I have now, honestly. And I lost the money afterwards. Okay, I lost the money afterwards because now this is what scalping does to you. You open a lot of trades because of the up and down. You're trying to take advantage of the market volatility moving inside of those key PD arrays in the lower time frames. I don't see any problem with that. All right. The problem comes when greed follows your trading plan. The moment you allow greed to enter into your trades, that is when everything goes. You are thinking that I can make more money in this market condition. I could open a bigger lot size. So if you are undercapitalized, like how I was, opening a big lot size inside of a small account, it doesn't bode well. It doesn't go well, good people. It doesn't. So you need to lower your risk and apply proper risk management. That's it. You want the holy grail? Apply proper risk management in whatever that you're doing in this market condition, or whatever market condition that you're comfortable trading. Just apply risk, and that's it. Proper risk. So I think I'm going to be doing a challenge. I don't know when, honestly, in this November's price action, but when this particular setup is there, then I will talk about it. I will take some trades. I will document. I'm not promising you all of that, but I'm just saying that I might do something like that just to show you what I used to do back then. So since my knowledge was so small, I did not know what I was doing, I lost the money back. And I had to learn this very lesson that I'm giving you now, that you have to lower your risk. You have to use proper risk management because you're taking a lot of trades, and a lot of those trades, if they are based on greed, meaning that you have a big lot size where you should not have a big lot size, you are undercapitalized. So if you do that, then you're going to be in trouble. Few trades, you're going to be wiped out. Okay, that's how traders lose money. We do these mistakes and we learn, good people. Okay, we learn that that is not how you trade. So you do it safely. You protect yourself, your mental capital, and your actual capital. Okay, so we were looking for this buy sell liquidity pool up here, and my trade, the one of a swing trader, yep, this is how I viewed the marketplace. I'm giving you a contrast because out of this consolidation, the market is going to explode. Okay, it is going to explode, good people. It is basically waiting for something. All right, so down here it is the November's opening price. We are waiting for the new month to begin, right? So before the market begins a new trading month, we are going to have a consolidation market. It is going to consolidate. So you need to find those highs and lows. You need to find them, you need to see them, where price is resisting and where it is supporting. You need to find those key levels, right? So I gave you guys two levels. Here is the buy sell liquidity pool that I spoke about as a draw on liquidity, and here is Sunday's buy sell liquidity pool, which is relative to this particular high. That is what I called for in October's price action, and we got that pretty good. We ended up retracing all the way back down to where the support down here. So you will be continuing with your model. You buy here. Where is the target? If you're looking at this price range here, this is the buy sell liquidity pool, but you're not looking for the high. You are not looking for the high. You're looking for inefficiencies where price can easily draw back to. So here is the opening of November, price action trading lower, and this is the wick that I'm talking about. If you split that wick in half, you're going to have the 50% of that, right? So here is the 50%. It just hit the 50%, and now it is rushing to the upside. So if you're looking at it on the daily time frame, you can clearly see how these are buy side liquidity pools up here. On this particular day, we did take some profit, good people. Price traded inside of this inefficiency. So it is telling us that it wants to go up, right? This high, this buy side liquidity pool is not on some random level. No, it is at the fair value gap. Okay, so this fair value gap makes your buy side liquidity. We just tapped into it, left this particular high, and we were attracted into the downside, right? So we left the buy side liquidity pool intact. That is suspect. We want to see price action attack this buy side liquidity pool. So which ideas can you use to come to that bias? Well, number one, it is this wick consequent enrichment. We hit the 50% of that, and this is the reaction. This is a good sign. All right, we want to attack the buy side liquidity pool. We just took out the sell side liquidity of the month end consolidation. Yep, we just did that, and we traded below the 20th of October. We hit this particular wick. This wick here, it is the mid-month. So here is the mid-month price action getting respected at the beginning of November's opening price. This is a good opportunity, good people. The opening of a trading new month will provide you with price action that is easier to hold. This price action here, I would easily hold it. Okay, I won't think like a scalper down here. The scalper's mindset, I'm not really a scalper, good people. I am more of a swing trader. So these are the type of trades that I would be interested in because they are fast. It's not consolidating like how it used to. It is now moving. It is allowed to move because now it is the new month of November and the buy side liquidity pool is here and here. That's what I'm thinking. All right. So with the respect of this particular wick, I see a great deal of an expansion to the upside. Hopefully it's going to continue being aggressive like this. Let's see how it opens for November's price action. So hopefully you learned a lot of the ICT techniques that you guys can utilize. But essentially this is how I am trading step index. I only post about a certain market condition that may interest me. I'm not going to post a video every week or every day. I won't do that, right? I will only post when price action is agreeing with my technicals that it wants to do something. Then I will post something about it. So don't expect a video from me every now and then. Please, guys. I'm a busy man, right? I work, good people. I have a job. I'm not available for the charts most of the time, right? So I will usually come in at certain times of the month that will allow me to make easy trades. Okay, easy trades, easy money. When price doesn't have a lot of the back and forth, that is when I am present, right? So with that, good people, I will leave you to backtest this information. I'll see you guys on the next video.